Welcome to the channel. For those of you new, my name's Dave and I work in financial services, and these videos will cover a mixture of my journey and development towards financial freedom. So it will review the assets and investments I hold and my journey. It will review investment products in general, and it will also be about videos about improving your financial well-being, so hopefully you can reach your financial goals and aims to suit your requirements. Remember, if you like the videos, smash the like button, subscribe to this channel so you can reach and grow a wider audience. So this latest video is about my stocks and shares ISA held within the UK. Now, it's not to boast or brag, it's to give people an oversight and a review into the assets I hold, the reasons I hold them, the aims of the portfolio towards reaching my financial goals. Now, for the year of 2021, we had the following plans or outlines. We're aiming for a year-on-year growth of 10%. We're aiming for a year-end value of £50,000 and annual dividends within the ISA account of £500. Now, if we look at the following chart, our portfolio is well ahead of expectations, mainly because of a bull run in the UK, but also because we've increased the level of contributions we were initially expecting to make at the start of the year when we decided to set our goals and objectives. If we look at the following chart, at the end of September, the portfolio was worth £56,714, a year-to-date return of 16.66%. And if we look at the end of October, month-end value of £58,839, a year return to date of 19.33%, giving us a monthly profit of £2,125. So as I said, well above expectations. Now, during the month of October, we made contributions into our account of £984. We received dividends of £68.20. We had fees from our provider of £10.78. And our portfolio's got a yield across our 9 shares of 3.16%. And if we look at the following chart, we received dividends only from one company, but we did receive dividends during the month from Aviva, £68.20. We did reinvest that, giving us 16 new shares moving forwards. So year to date, we've actually met our objective. Dividends, £500.39. Now, if we look at the following graphics, a bit of an overview of analysis where our shares are held. So at the moment, we own 9 shares within the account, 6 in profit, 3 in loss. Out of our shares, £22,539 is in shares, makes up 38% of our portfolio, of which 35% is in the FTSE 100 and 3% is in the FTSE 250. And with regard to geographical sectors, predominantly UK based, 61% of our portfolio is in UK and Europe, 23% is in Americas, and 16% is in Asia and emerging markets. We're just going to go into an overview of the shares we hold within the account. As I said, we own 9 shares. If you look at the following graphic, our largest shareholding is Lloyds Bank. We own 11,455 shares, £5,755, 9.8% of our portfolio. Our large shareholding is Legal & General. We own 1,602 shares, £4,628, nearly 8% of our portfolio. It was bought for a very good reason. One, insurance companies very sector, but it's given a very nice yield of 6.5%. Our next fund holding is Aviva. Recently increased contributions towards that share. We now own 944, £3,726, 6% of our portfolio, and as we said earlier, gave us a nice dividend which was reinvested for future growth. We own another banking stock with Barclays, 1,479 shares, £2,991, 5% of our portfolio. Again, it was more like Lloyds, more towards UK based, but personally I think banking sectors will recover. When the shackles are off, dividends will increase, the economy will grow, but that Barclays, Legal & General and Aviva, all safe, secure, steady companies, will hopefully give great results moving forwards, and it will give very good dividends. Now on that basis, in the quarter, Lloyds, Barclays and another shareholding we own, NatWest, all good, very good quarterly results. So hopefully some great sentiment towards the portfolio, towards years to come. Okay, hopefully the banking sector will get some kind of recovery in place. Our next largest shareholding is Sainsbury's, the retailer, 788 shares, £2,359, 4% of our portfolio. A very good rally recently, good results hopefully due during the next month of November. Has been recently affected by the takeover of Morrison's, but everyone's need retailers, everyone needs food, hopefully a very good recovery play. And then we've bought a share on a more global basis, Hsbc, 231 shares, £1,000 in our portfolio, makes up nearly 2%, but it was bought again as a banking sector, but more on a global basis away from the UK. Our next shareholding is AJ Bell, the platform provider we use, 237 shares, £971, makes up 1.65% of our portfolio. As we said, this share was bought for growth reasons. Very good numbers during the year to date. One, number of new clients, and also the assets under management. Does pay a very small dividend, but hopefully a long-term provider as more people invest, use platforms. Our next shareholding is NatWest, 252 shares, £575, makes up 1% of our portfolio. Again, as we said before, had very good results, but hopefully when the government reduce their banking sector stake, currently around about 60%, it will be able to be free to pay dividends and hopefully grow the business without restrictions from the government in place. And then our smallest shareholding is Card Factory, 1,126 shares, £533, makes up 0.91% of our portfolio. As we've mentioned in previous dividends or previous videos, has been reduced or affected because of banking sectors, but during the month of September, banking was refinanced and it had some great results moving forwards. So hopefully when the high street sector recovers, it will reinstate dividends, it will reinstate future dividends. So predominantly the portfolio mainly based upon banking, insurance, but all good long-term companies. Hopefully dividends will improve, profits will improve, and 9 shares make up 38% of our portfolio. Now if we look at the funds held within our portfolio, just going a quick overview. Now at the moment we own 14 shares, makes up 61% of our portfolio, £36,235. It's only in the last 12 months we've diversified from individual stocks to new funds. One, to give us greater exposure away from the UK market and hopefully give us some very good returns to meet our objectives of 10% return. Out of the 14 funds, 12 in profit, 2 are in loss. And during the month, we did contribute £984, as we've said earlier on, and we did make 2 purchases, £500 into a US smaller companies and £500 into an Adventurous tracker fund. Holdings we already had, but we decided to increase our existing portfolio within the sectors. If we look at the bottom graphics, not going to go through all 14 funds, but just our largest shareholdings. Our largest fund we hold is a global equity fund, £4,635, 8% of our portfolio, but a very nice profit of 32% since we bought it. Our next fund is Ballet Gifford Positive Change, quite selective, very few shares within the portfolio, but all good growth shares, £4,344, 7% of our portfolio, a very nice profit of 45%. Our next holding is a technology fund, £4,282, 7% of our portfolio, and an even better profit of 71%. The FANGs, the tech stocks, have all had some great returns, may settle down moving forward, but market sentiment has given the technology companies some excellent returns as we provided. 71% is something we are not going to turn down. As we said, our next fund is a US smaller companies. We did increase, as we've said, now own £3,772, 6% of our portfolio. Now showing a profit of 26%, has been reduced because of our recent purchase. Our next shareholding, our first loss is a China fund, £3,680, 6% of our portfolio, a loss. Only suffered in the last few months because of sentiment towards China, but a loss of 8%. China will recover. It's a great fund, it's got great sentimentals, and hopefully will give us some great returns moving forwards when global shortages, sentiment towards China hopefully recovers. Our next holding is a UK smaller companies fund, £2,700, 4.5% of our portfolio, small profit of 8%. In the UK, I think smaller companies will outgrow larger companies, hence the reason we bought it. Our next fund is one we've recently increased, a passive Adventurous fund, £2,443, 4% of our portfolio, but it's still showing a nice profit of 22%, even with buying it during the past month. Other holdings we do own is an emerging market fund. We own a mid-cap fund, we own an AIM fund, down to our smallest fund, a Russia fund. £673, 1% of our portfolio, but a very nice profit since we purchased of 34%. So just a quick recap, 14 funds, 12 in profit, 2 in loss, £36,000, 61% of our portfolio, but they were bought for diversification, and hopefully each of the funds will have good years, some bad years, but they will meet our objectives of 10%. All the funds, just like our shares, are bought for long-term reasons. So unless the fundamentals change or the management change or there's some kind of severe downturn or reasons to sell them shares, our aim moving forward is to increase our existing holdings, as we proved out the last month with buying 2 additional purchases. Now, as I said, it's not a get-rich-quick scheme, it's a long-term investment journey. Just to recap, over 30% for the year to date, well above our expectations, but the aim of the portfolio is make 10% year on year. Something we're just going to leave, we're going to invest, money reinvested, and the portfolio will grow and grow and grow to meet our investment aims. And remember, if you like the videos, smash the like button, subscribe to this channel, and we'll see you again in the next video.